Hey everyone, hope you're having a great day. So this is your market snapshot for August 31st, 2024. So last week in the markets, the SPY finished up about 0.3%, the IWM down 0.16%, and the NASDAQ down about 0.7%. We can see that NVIDIA, they actually had earnings Wednesday after the bell, and that's kind of what this spike to the downside here is. So, NVIDIA is basically kind of what caused that move right there. Actually, we can actually just pull NVIDIA up here, and it will be in the comparison. So instead of the SPY, this is now NVIDIA. But we can see, this is what happened with NVIDIA after the close on Wednesday. So I thought we would take a moment here and actually look at the S&P 500 sectors. The top left here is the SPY. So this is the benchmark, and then we have the remaining 11 sectors listed. And these are all 20-day, 1-hour charts. So this is roughly just a 1-month chart. And we're looking at the percent gain or loss over that 1 month. So we can see that the benchmark SPY is up about 9.5%, and we can kind of see what is leading them, what could be carrying them higher. The XLK, which is basically the technology, is actually up 12.3, but we can see it's actually kind of been in a downtrend here for about the last 2 weeks. But the XLF, the financial, has been in just a solid uptrend in that same time. The XLI has been coming up as well. The XLV. So, this kind of just shows us where money is flowing in and flowing out. We can see that the XLC looks kind of flat, maybe a possibly trend down right here. Decline, it looks like, in probably the last day. So now we'll look at the 20-day, 1-hour ES futures. I like to look at the futures in the S&P futures, which is the ES here. And we can see actually really the last 2 weeks, we've basically been trading in kind of just a channel right here. So just kind of in this range here. So, I'm looking for, once we get above or below this range, to probably continue a trend higher or lower. And it's probably going to take somewhat of a news announcement now for that to happen. We're still not back up to the all-time highs yet. So the all-time high is roughly 57.21. So we are close to it. But right now we're just staying in between roughly the high and the 23% Fibonacci level. And that is, if we want to just zoom out to a 4-hour chart right here. And that's basically from our low back in April up to the high that we had in July. And our pullback, and once again, I mentioned last week, our pullback, we pulled pretty much to the 78% Fibonacci retracement. And we've climbed back up. We still haven't made the high yet. So as far as news goes for next week, Monday is a holiday. But Tuesday you have manufacturing PMI. You have the job openings on Wednesday, unemployment on Thursday, and then services PMI as well. And then Friday, we also have unemployment as well. We also have FOMC members speaking Friday as well. So pretty much any of these news announcements here can move the market. And it looks like we're kind of getting close to wrapping up earnings season. Not really much left. Broadcom is probably the biggest one on here that I know of. There could be larger, but that's the main one that I know of. And for earnings, what I like to do is just find something that maybe has had somewhat of a pullback after earnings. I wait 5 to 10 days. Sell a cash secured put if it's something I'm interested in owning. So that's what I'm looking for there if I do trading earnings announcement. And lastly, we'll look at some cash secured put ideas. So this is 3% out of the money, 10/18 expiration. So that's basically 48 days to expiration. These are some ETFs, just a list of ETFs that I have right here. And if you're unfamiliar, basically we have the symbol listed right here. The last price, the 52-week high and low, percent change. If they pay a dividend, it'll be listed right here. This is the expiration date for the contract. We have the strike listed again right here. We have the bid and ask for that contract to let you know how wide that is. That'll let you know maybe how easy it will be to get into it. So some of them are wider than others. Like for instance here, this Bitcoin ETF, $145 and $2. So you got pretty wide right there. This is the weekend though, so that can change once the market opens. We have return on capital for the actual trade. We have the return on capital that has been annualized right here. This tells us that the strike is at least 3% out of the money. We have the put strike listed again right here. Days to expiration. This tells us the delta of that strike, the implied volatility of that stock. We have the RSI of the stock listed here. We have the IV percentile listed right here. And this tells roughly the cash required to put the trade on, your cost basis if assigned, and roughly the discount from the current price if assigned on that stock. And then as far as weeklies, it's roughly the same thing. We're looking at 2% out of the money, 10/18 expiration, so still the same days to expiration out, but we're looking at a 2% strike out of the money, which is listed right here. And I will just scroll down, kind of show, once again, these are listed in alphabetical order. Another thing to note is this one actually lists earnings as well, and this is going to be in trading days and not calendar days. So if it's 10 days away, that is 10 trading days, not 10 calendar days. And once again, you know, if you see something here, you can pause it to maybe look at it. And I also have both of these, this file listed on my Patreon as well. If you're interested in it, it connects directly with Thinkorswim and pulls all this data in automatically. So anyway, that's all I have for you today. Thanks for watching. Have a great day and bye.